We've been doing this podcast for 2.5 years now, and the most listened to episodes are always the ones talking about career and certifications in Treasury. So we decided to partner up with the AFP, the Association for Financial Professionals, so we can offer you a $100 discount code on all of the AFP's products. This includes, of course, the CTP, the Certified Treasury Professional, which is hands down the most renowned and recognized certification in Treasury out there. And of course, the access to the CTP exam prep platform as well. Check the link in the description to access to those discount codes and take your career to the next level. Welcome to the Corporate Treasury 101 podcast. In today's episode, we discuss trade finance challenges in the energy industry with Danilo Gonzalez from Siemens Energy. Danilo is a skilled Treasury Manager leading a Treasury competence hub in Lisbon with a demonstrated career spanning over 15 years of experience in the Treasury space. Siemens Energy is more than just an energy technology company. Siemens Energy meets the growing energy demand across 90+ countries whilst ensuring our climate is protected. In the episode of today, expect to learn how the companies in the energy sector address trade finance challenges in the realm of energy and renewable energies, whether there is a distinction in treatment between the energy and renewable energy sectors in trade finance, do ESG challenges in the energy sector impact trade finance decisions, how do energy companies navigate trade finance amid fluctuating energy prices, what innovative solutions has the energy sector adopted to streamline trade finance processes, and like always, much more. Another interview that happened in person, and you can find it on YouTube and actually watch Hussam and I interview Danilo, who has been fantastic to us, especially for a first industry-focused interview. We hope you will enjoy the episode. If that is the case, and when you're thinking about how you found our podcast, chances are that it was through word of mouth, social media, or a recommendation from your favorite podcast platform. And this is our only request to you. The best way you can support the podcast is to head to YouTube and subscribe to our YouTube channel, Corporate Treasury 101. That will mean the world to us and help more people learn about Treasury. And with all that being said, please welcome Danilo Gonzalez.
Danilo, thank you so much for coming on the Corporate Treasury 101 podcast.
Thank you for having me.
Not at all. So we're going to jump into some more advanced versions of trade finance. So could you start off by just explaining to us again and reminding everyone what trade finance is?
Sure, why not? Trade finance is a group of strategies or financial solutions that helps to mitigate the risk when we perform trade. For example, you can imagine that you want to sell a product abroad, and then of course you will need a buyer, and trade finance help us to resolve the divergences, any kind of risk that might appear from the supplier side or the customer side. Let's put it this way.
And that's the main purpose of trade finance, is to eliminate the risk?
It's to mitigate the risk and to enable the trading. Right. No? Basically, you can introduce a third party, which could be a bank. This bank will assist in handling the risk, inherent risk that you will face when you do trade, right? Basically, you can use trade finance for different purposes, like improve your cash flow, for example. You can do sales of receivables as well. So supply chain finance is also considered kind of a trade finance instrument.
Interesting.
But also, for example, it's not a traditional financing, because you can use trade finance to cover, for example, currency risk. You can cover political instability, in non-payments possibilities, or maybe a creditworthiness of one of the parties involved.
So I thought, trade finance will allow you to do trade internationally, right? So you want to sell, you're a European company, you want to sell something to a US company, you're not sure they will pay you. So exactly. You put in place a contract with a third party that say, hey, I'm guaranteeing this trade. So in exchange of a fee, obviously, if this deal doesn't go well, I will pay you back
exactly
part of it or something like that.
It covers the payment or the receivable for the exporter, right? And the importer can get an extended credit in order to fulfill the trade order.
Okay. And so how do you enhance cash flow with trade finance? I'm interested into understanding that part because you will receive an advance of cash as well?
It depends on the instrument. So, for instance, the most common is warranties, and then you can have many types of warranties, like, for example, bid bonds for when you apply for a new project. You have advance payment warranties. So you need to offer 100% of the advance that you receive in a warranty. So it has a value. The warranty has a value, maximum value. Then you can have a performance warranty. You can have a warrant warranty. Depends on what you are covering and in which part of the project you are. Right? So it will depend. But then you can have also a letter of credits. But the difference is that in a letter of credit, you will pay with a letter of credit. So it's going to be executed. So a warranty is like a check. I give you the check, and if I don't pay you, you can go to the bank and execute the check. In this case, the warranties are at least not almost never executed. If everything runs well, there is no need to execute any warranty.
So it's a risk prevention instrument, the guarantee, whereas the letter of credit, you will just say, okay, I will pay you, but at a later stage or when you deliver something.
When the documentation is completed, then the letter of credit will be released with the issuing bank. Yes.
Super clear.
So it's the other way around. It will almost always get issued.
It is the purpose. The purpose is that the issuing banks take the risk from the customer. So like this, the seller makes sure that it's going to receive the money with the proper documentation. So it's not anymore on the client side. The risk is on the bank side at certain point.
So that's important, I guess, because trust isn't always available.
It's strangers trading, right? So there is an inherent risk when you are trading with somebody that you don't know. You don't know if the shipment is gonna take place. The vendor say, like, if I say my shipment, I don't know if the customers will pick it up. So there is risk on the supply and also on the customer side, both sides. So banks or institutions go in the middle to allow the trade run smoothly, right? Mitigating the risk both sides. There is risk in both sides, the buyer and the seller. So this is the key play that banks or insurance companies can also play.
How does the bank price that? Is it a percentage of the amount? Is it a fixed fee typically? How do banks price that?
For example, for warranties, normally what you get is a credit line. Okay, so let's imagine you say, let's get I will negotiate 100 million credit line for warranties with bank ABC. So the bank will say, okay, for this line, I will charge you, for example, for warranties until 1 year, 3 basis points, let's imagine, and then from 1 year to 3, another price, from 3 to 5, and then unlimited, another, because unlimited represent more risk, it's going to be more expensive. And it's going to be a percentage of the amount, yes.
And then, from what I remember from my old banking days, you would also charge per guarantee for the issuance. There will be a
small fee for issuance, modifications.
Exactly.
Depends on your negotiations. It could be for free. This issuance price, I mean, if they are getting a percentage for the warranty itself,
right.
In my opinion, it's easy money because the risk, if you never execute, they get a lot of commissions, and it's I won't say low risk, but there are not many cases where you execute.
The banks win.
Yeah, exactly. Yeah.
It's a good life lesson.
Exactly.
Yeah. So to the trust point, does it mean that once you have a well-established relationship with a client or a supplier overseas, you will not put in place any trade finance instrument anymore, or will you still, because there is an inherent risk, as you said, I don't know if
I think there will,
or this kind of stuff.
I think there will be always, because if you, I mean, by reading some books, you will see that 80% of trade use a form of trade finance. So it's a lot. So of course, building trust you can avoid this if you have a long relationship with this customer or vendor. But I think it could be an internal policy. Like my process says that I need to request this and that and that. So normally what we focus mostly is on the outbound. So in which me as a supplier offer a warranty to my client, because this is where the risk lays mostly. But there is also the inbound, in which I am the client. I am going to ask my supplier a warranty. Both need to be handled, but there is a bigger focus on the outbound because there is a reputational risk. There is, of course, the non-payment risk and so on. The execution part that then goes to legal. So this is why outbound has more focus, I will say.
So as a supplier, you want to make sure your client will ultimately pay you. And as a client, you want to make sure your supplier will deliver the goods that they promised. Hence the difference between the performance guarantee and the bid guarantee and the difference.
Exactly.
So can we deep dive a little bit more into the different instruments that are used in trade finance? So you name a few of them, letters of credit, guarantees, what else is out there?
Those are the two most common, but then everything is driven by the cash flows. No, in terms of trade finance, you have commercial cash flows involved. Mm-hmm. Okay, so it's not like traditional financing, but there are other instruments that are also considered part of trade finance, like revolving sales of receivables, for example, or project export finance as well, because everything goes at the same time. Can be all these products at the same time. Mm-hmm. Depends on the needs. How big the project is, what are the needs of the customer, and also this will boost the revenues of the customer. In this case, maybe a customer, let's imagine that the customer has no capacity to issue 1,000 pieces of something, and then you say, okay, I'm gonna get a credit for that, and I'm gonna deliver what is requested. But without a kind of export finance, it won't be happen. It won't be possible. Right? So this also helps the revenue. If you have hardship, financial problems, it's gonna help because you can use some kind of credit in revolving facilities, for example. Yeah. So
why would a third party, if you're in financial difficulties, why would a third party come and guarantee a potential trade? What's in it? Because the risk is higher, or do they then price it higher as well? So that's why they would do it.
Why do we need a third party? I mean, it's basically because you need to have another institution backing you, mm-hmm. Backing your business.
But so why would they take the risk when the third, so not the third party, but one of the party in the supplier or the client part is in financial difficulties? That could be offset by a trade finance instrument. What is it? It's more expensive, or why would the third party do that?
Why? Because they want to help you, and then you show some numbers, like saying that I am going to
business
cash in with this and that, and then I will repay you. Or they can put some assets on as collateral as well. Okay. Normally, this is the case, but normally when you negotiate a credit line, you try not to put collateral because otherwise the purpose is different. It's normally you say, okay, these are my numbers, my financial statements, how much I'm gonna get from you, 100 million, 200 millions line, and then you have to use until this capacity is fully completed.
So trade finance credit lines by nature don't have a collateral because that would not serve the purpose and actually go the opposite way.
Yeah, because if you put a collateral, why then I need a line?
Exactly.
I will put the cash collateral, and then I will use my own cash, my own assets to cover the risk.
I don't know if this is a stupid thing to say, but is the trade itself not like a collateral? Like there is a underlying trade to the
but banks can ask collateral. I mean, if they think that you don't have enough assets, or that you are a risky customer, they could ask a collateral. And then for this, you can, for example, issue a global letter of support in which your parent company will back you up.
Right.
The different subsidiaries, let's put it this way.
So I think we've touched upon it quickly, but maybe to close this overview and refresher of what trade finance is, why is trade finance crucial for business, especially the ones that operate at global scale?
Well, actually, it's crucial because, as I mentioned, there is 80% of the international trade use a form of trade finance.
Mm-hmm.
So you are going to you need this third party to intervene in order to, let's say, to mitigate the risk and agree on the divergences. No?
Yeah.
Customers want something, the supplier needs something else, and then there is a meeting point, let's put it this way, in which everybody agrees on something. And this is the document that will play a role in order to, otherwise the trade probably will not happen.
So to enable trust.
To enable the trade.
Yeah. Makes a lot of sense. Awesome. Danilo, to shift to the energy sector, which is maybe where you have particular good insights in this sector. How does trade finance manifest uniquely in this particular industry, the energy one?
Well, in the energy, as in many other areas, let's put it this way, it all depends on what you do. So what is your business? It's not the same if you make turbine engines or the gas turbines, or if you make ships, or if you make only batteries, because the tenors or your project is going to be a long one, like let's imagine a fabrication of a turbine and plus 15 years of maintenance. Mm-hmm. It means that your warranties will take years to mature, right? And these long tenors will block your lines because they won't be revolving as fast as you want. So if you sell a product that is gonna take for 1 year, then every year you will recover your utilization. If you block your line for 10 years, 5 years, then you are blocked for this long period, and then you very easily you will block your line for 100 millions. Let's put it this way. So that's the key. And in our company, if you need to build a turbine, it's gonna be probably a contract for 15 years together with the maintenance. So it's very difficult to not to offer warranties for long periods.
Yeah. So how do you walk around that? Because I mean, the more you grow, the more turbines you will eventually sell, and so the more credit line you're using. But then the banks, they are not going to grant you a limited amount of credit, right? So how do you walk around that very long tenor that is specific to the energy sector?
You need to set some policies like how much I am going to do. I'm going to offer in terms of, for example, warranties according to the type. So, for example, you can say only 10% of the contract for performance, only 5% on bid bonds, 5% on warrants, for example. So then you cannot offer more than that. Mm-hmm. You can say, I'm not going to offer parallel warranties, for example, performance plus warrant at the same time, because that doesn't make sense, because it's the life cycle goes one after another. Even though clients can ask for this, but we try to avoid this. Another way to avoid this is parent company warranties, which this is a good solution because then you don't need to use a bank or a financial institution for that. And also you can offer corporate warranties that comes from your parent company. So the corporate warranties are exactly the same as a bank warranty. The difference is that if it's executed, who pays is your mother company and not the bank.
But that takes a bit away from the third party aspect of it.
How does the risk get mitigated in that regard for the
Well, it's not very popular, I have to say. So it's a lot of clients say, no, I want a third party, a different institution rather than your parent company. But on the other way around, you always will say, it's true that we are for the same group, but nobody want to risk the reputation of a non-payment. So if the conditions are met, you need to pay, because it's a contract. A contract is a contract, and we need to celebrate this contract accordingly. So at the end,
I'm guessing that those kind of funds, where I had heard of this happen or could happen, for example, is if you have an international company that has operations in a subsidiary in Africa, Asia, like less, more risky countries. If they have a head office in the US or head office in Germany or head office somewhere else, then I guess it would make sense a little bit more, right? So, for example, if you have a company based in, let's say, Mozambique, we were discussing earlier, who needs to buy equipment from Germany, right? Then the company in Germany that's selling the metal or the material would say, wait, I feel risk in doing a transaction with Mozambique. I don't know the jurisdiction, I don't know this. Yes, you say you're this company, but I have no guarantee. But they say, okay, my parent company is also based in Germany. They can guarantee it. They say, okay, I understand German jurisdiction. I believe that I can take this risk and it's a lower risk for me. I wouldn't get trade finance with a German company. I would with a company in Mozambique because I don't understand the jurisdiction. And then maybe...
There is a small difference between a parent company warranty or a corporate warranty. The parent companies is based on the fact that if I don't fulfill my commitments, my parent company will do it. The corporate is the payment side. No, if I don't fulfill my agreement, then you can execute the warranty and they will pay for me. So it's more the payment side, and the other is more the fulfillment of the activities when you make a parent company warranty.
Interesting. So for performance, it will make sense to actually have a guarantee from a same entity, which is at the group level, because they have the knowledge. A bank will not, implement and start and building your turbine in your place. They will pay for it eventually, but they will not fulfill the objective.
The obligations. Yeah.
Interesting.
Yeah.
Does renewable energy sector have any differences versus the broader energy sector?
Yes, because renewables it's basically something that you can redo, no? And not everything in the energy sector is renewable, right? So it's even when we say sustainability, so not everything that it's green is sustainable, right? Because it comes with the fact of the reuse of the nature, but as well how green you are at the same time. So this is the key element when we talk about renewable and sustainability at the same time.
How does that affect the trade finance aspect, or does it?
We see now institutions, banks especially, that they want to be greener, right? So they are looking at the portfolios where they can invest the money in terms of how can I be greener. So I'm going to look at the energy renewables business or waste management or water management, reduce of emissions, and put the investment in those projects that are ESG related, let's put it this way, in order to increase my numbers or my rating in this regard.
Banks, so would they give you more favorable rates as a renewable company? Because it benefits them to get a better ESG score, which lends them to better favorable rates from their central banks, for example, right? That's kind of where they're...
I think this probably is coming, but I think now it's behind the curtains still, in which every bank has an internal credit committee. No, They will assess your company, and probably the green factor will give you extra points, and then you will get a pricing based on this. I trust is more or less like this, but we are not inside the bank to say, okay, how you are assessing your credit rating in order to see if I am. If my green part is helping me, right?
Yeah. And it's not a bad thing, on the contrary, right? If you can get more credit, the banks also...
It's going to be an advantage if it's the case. If this, this is what we are hoping for, because we are, our company is investing in this, in this sustainability, affordability, and reliable energy. So, yes.
But in the type of instruments or the amounts involved or the tenors involved, is there any difference compared to the traditional quote-unquote energy sector? It will be pretty much the same. It's just
it's the same
bank that changed.
It's the same, and even though for example, in previous when we were a big conglomerate, trade finance can receive a request from mobility sector, from energy or health and care sector, and then trade finance department is kind of agnostic regarding the area. You will treat as a normal transaction towards the bank. Now things are changing, so probably they will look for these projects or even try to invest on these projects. Where are the green companies in order to create new products, new policies for companies that are greener than the others.
Okay, so interesting. Do you have specific examples or case studies where you saw trade finance really enable something in the energy sector from your experience?
Yeah, I mean, I can mention a couple of examples. In Italy, for instance, there was we are building a big power plant in Ostiglia, and there is another one which is called the Tyrrhenian Link, which is the connection between the Sardinia, Sicily Island with the mainland. Okay, so there is going to be
with the football.
Somewhere around there.
Yeah,
The connection of the two.
Exactly. And there is going to be an electrification system, a massive one that is gonna provide sustainable energy to millions of people there.
Amazing.
And this can only achieve if you have a project export finance in place for the customer, because otherwise it's impossible for them. Plus, you need to issue warranties for your customer. But as well, there was another component, is the customs authorities. So when you bring the players, you bring, for example, Germany into the game, they need to pay the customs authorities. And the only way to pay customs, you need to open a dedicated account for this. You need to issue another warranty for the customs authority as a compulsory requirement. So with a good expertise in Treasury, you can tackle all of these problems that you will face in order to pay customs, to issue warranties, to avoid risk with the tax authorities,
Obviously.
and put everything in place in an easy way. Let's put it this way. But it was a combination of trade finance plus cash management plus project export finance all together in all these big projects.
So not to take too much of attention, but what do you call project export finance? Like, how is it linked to trade finance, or how is it different?
It's when, for example, a financial institution will help the customer to fulfill the contract.
Okay.
But it's this specific project. So it's not that because I need money, somebody will solve my solvency problems. No, it's just for this project, I will sponsor you in this specific project because I see there will be receivables that you will achieve this revenue, and then I will finance your project.
So they are not financing the client in particular, they are more financing a project,
Exactly.
an idea, something that needs to come off the ground.
And for this, sometimes seller and buyer agree on who will be this potential sponsor. And this helps to the client, because the client might not have the let's say the financial capabilities to achieve what is required. And this is where the third party comes in play and assist in what is missing.
Awesome. And so maybe to stay on that example, but also in general, that are there particular instruments that are more frequently used in the energy sector? I think you mentioned you wouldn't make a mix of multiple ones, performance and warranty, but like, what are the most used trade finance instruments in the energy sector overall?
Warranties, LCs, but again, everything depends on where you are operating.
Okay.
For example, Pakistan is a country where LCs are compulsory.
Okay.
And in Angola, it used to be the case that it was abolished, like 3-4 years ago was abolished.
Why would the country make letters of credits mandatory?
For security reasons. It's a regulatory requirement.
From the government.
Yeah. So the regulators in the country can say, we want to make sure that this money is paid. So the instrument to be used is a letter of credit. Otherwise, you cannot take the money out. And these regulators can define the only way to transact in certain countries, in certain markets. So it will depend on where you operate, and then you need to be flexible. In LATAM, for example, in Latin America, they use a lot of insurance companies, more than financial institutions, than banks, with credit lines. It's here in Europe we don't use much, but it's more expensive as well. At least in Europe, it's getting the same value of a warranty from an insurance company could be a little bit more expensive than what the banks can offer.
Very cool.
And the ESG point we've already covered as well, right? So banks really look at it quite differently as well. So that's super interesting. So are there any differences in the energy sector as a sector itself? Because coming from Siemens Energy, you're in this really, and you were in broader Siemens before as well, right? So you kind of probably seen other developments as well. Is the energy sector really treated differently to other sectors in any way? Because you're not selling, so just to be clear as well, you're not selling kilojoules of energy. You're selling equipment and construction projects to build energy production, right? Is it just like any machinery, or is there any other differences in treasury for the energy sector?
It's in energy. It depends on what you are building. No, the frequency. For example, if you sell computers, probably your risk is going to take 1 month, and then you start again. If you are building a turbine, then it's gonna take years. That's the main difference, the tenor. Then for the rest, treasury-wise, it can be treated in a similar way. It's a contract. You need to handle it. You need to mitigate the risk. You need to communicate with the banks, with the client. Similar process to any other business, I would say.
So what is that warranty? Because I feel like the warranty aspect is probably the maintenance and aspect. Yeah. Sorry, is the main difference, I guess, then, because you have this equipment that you're maintaining and you have a service contract for that going onwards. If you install a big wind turbine, you're also doing maintenance of that turbine, typically as the original supplier. What are the treasury implications of maintenance contracts after?
It's a good one, because of course, if you see the fluctuations on the pricing and all the situations that we are facing with the Ukraine war and so on, you need to anticipate. You can always renegotiate, but it's not going to happen every time. You need to agree with your customer. If the conditions change, what are we going to do in terms of the warranties?
Because maintaining a wind turbine in Ukraine is quite difficult right now.
Yeah, and of course the raw materials raise the prices, so you need to adjust your offer, because when you make an offer, you will include the warranties that they are requesting, the price, or the price that you are going to spend on this. So if all of a sudden I need to pay more for this because of any situation, then you need to anticipate this, otherwise your margin will be affected. So it's very important to try to assess, forecast your needs. Also consider that a credit line will not happen from one day to another. Could be a long negotiation for months with banks.
And is that so? Are there any treasury instruments that you use for that? Are you using trade? You're not using trade finance for a maintenance contract, are you?
If they can say so, they can say that I want a maintenance, because the maintenance also imply pieces replacement,
equipment.
So exactly,
parts that wear out and everything like that.
But it's less. No, it could be 5% of the contract.
And so that be a performance guarantee, or would that be another type of guarantee in that case?
It could be a warrant.
Okay,
a warrant
makes sense.
Yeah.
Okay. Who are the typical clients of the energy sector? For instance, in construction work, it happens that a lot of times those are governmental institutions, cities, and so on. How does it go for the energy? I'm saying this because obviously the governmental institutions will always ask for guarantees from the providers, and that involves banks. But so in the energy sector, who are the typical clients, and would they always ask for?
I would say maybe 80% are probably public customers. So it's the government, institutions, and the other 20 maybe is they are related partners, right? Because at the end you won't build everything alone, right? So you get some partners, and either you combine the request together with your partner in order to have one face to the customer, or you share the risk. I do my part, you do your part, and then we go to the customer as a joint venture or consortium, whatever. So there are different ways of doing this.
Interesting. What, in your experience, has been the biggest challenge in trade finance, in the energy sector specifically or in general? What's the hardest part? You've been on both sides. So you've worked in the bank. You've also been on the supplier side. You probably have suppliers of your own as well who you execute trade finance with, right? What's the hardest part?
I think the hardest is still the communication and all the manual work that is behind this kind of documents. So many people are involved. So let's think about in general. So you have the commercial guy, you have treasury, you have the bank, and also you have the customer. Okay, so all these parties need to agree on something, which is kind of difficult sometimes because the customer wants something. My policy says I need to do this. My commercial person wants something as well, and we have to meet. We have to get an agreement that please everyone at the same time. So there is a lot of back and forth with banks, with the customer, with the commercial colleagues, and and nowadays it's also important the KYC, or they call it the KYT, know your transaction.
Or even.
Okay? Yeah.
Okay.
So they can scrutinize the client, the project itself. They can check if you are ESG compliant. Yeah? So everything it can be requested. Extra documentation, the contract itself, because you cannot request, for example, a warranty without an underlying transaction. So banks could ask, okay, so you are doing this for which purpose, right? It's important.
Yeah, and actually thinking about it, the financial institution or the bank that guarantees the whole trade, they might not know anything about the other party involved. In the case of Siemens Energy, your potential clients, so they're like, okay, if your client don't pay you, we will pay you instead. But they don't know the client, so how does it go? Like, do they run a whole credit analysis?
They do.
Okay.
They do also on the client.
Okay.
You can have instruments in which you say, I'm going to transfer this warranty to another entity.
Mm-hmm.
Banks would say, if I don't know who is going to be the final beneficiary, I don't agree on this.
Okay.
Because I don't know to whom we are going to deal with. If it's in the blacklist or
Right.
in a sanctioned country, they will reject this. So normally it has to be clear, all the scope. Who is my party? Who are the parties involved? Who are the beneficiaries? Mm-hmm. If it's more than one, everything needs to be clear. And this is why everybody needs to be prepared for the back and forth in terms of documentation.
So how much, I mean, I guess it will depend on the trade, the company, the project, but how much time does it take from okay guys, we're gonna do this project until the guarantee is signed and therefore the project can move forward until it was stopped so far? Like what are we talking about in terms of time frame?
With a good bank, 2 days, 3 days.
Okay.
And
challenging the banks here.
If you go into a more difficult region, it could take 1-2 months.
Okay. And so that's 1-2 months during which the project doesn't move forward at all, because either the client or the supplier is saying, guys, I'm not moving.
You can be even disqualified because you didn't present the warranty. I mean, everything can happen. But the importance is the communication, the anticipation. That's why if you know that you are going to need something in 1 month, in 3 months, you can anticipate the wording. For instance, you can pre-align the wordings with the banks. Then requires expertise. With time, you will know what the banks accept and what is a no-go according to your policies as well. And also if you have a good contact in the banks that is very independent, because some banks, for example, will not move a finger without a legal approval. Some others, experts in banking say, I check this, I like this, move forward. So the moment that you involve more people in the process, the longer it's going to take.
Interesting. So you mentioned a few of them, Danilo. The Ukraine situation. I think when you were talking about the Italian project, there was also this tax aspect that needed to be handled. What are overall the geopolitical and regulatory challenges that come together with the energy sector and when it comes to trade finance?
Well, the regulators are different in every country. This is what we see all the time. So that's why you have to be prepared and try to understand the country aspect situation, the country regulators, the country aspects. So as mentioned, if in Pakistan it's compulsory for an LC, then you don't discuss why. You just do it, right? Because you know it is like this.
It's easy then.
Yeah, and then and then in other countries they have special products, and they say like either that or that or that. And for me, it would be great if we have standards like European standards. This is a template. Everybody can agree on this. It's fair for both parties. Let's do this. Schemes. It's called schemes. So in some countries they have a scheme 1 or 2. Everybody can use this scheme provided by the regulators. Okay, so.
But so what does that mean? Does that mean that, okay, in that country, the template that you're talking about, because if we can, we will advocate for it, if we get there someday. But what does it mean? So like, okay, the standard for this industry and this type of trade is this type of tenor with this percentage of the project being put in guarantee with this type of amount, or what do you mean?
Yes, the template is basically the wording without the amount or the tenor.
Okay.
Right. So it's just where you define the concepts and you define when this guarantee, for example, is going to be executed based on what, and everybody agrees that it's fair for both parties. It's not more for me. It's not more for them. It's equally is fair. It's even. So then you say, okay, let's put the amount here. Let's say between whom we are going to sign this contract, and we don't change anything else. And then the banks recognize the scheme and say, okay, this is the scheme that we also know in the country. And if we have more schemes in different countries, then you can go to these standards rather than my standard, which is different from the client standard, which is different from the bank standard.
That's in the legal wording. That's the hard part?
It
is legal wording. Okay. And then who, in the event of this, then this happens, and this person.
You can be very creative. They are very creative. I mean, it could be a joke, but if you ask a lawyer for an opinion, if they don't provide any opinion, then he's a bad lawyer.
100%. And so why is there no template yet in Europe, for instance, where you can think, okay, operations are globally standardized, more or less the same ISO regulations, like the same restriction. Why is there not a template yet?
I think because the regulators haven't agreed in something. It's like if you say SEPA, okay, let's agree on the SEPA standards. Fine. So why don't we go ahead and we agree on standard wording templates, European Union wise, for example, in which all the regulators come together and decide something. Also, compliance has a say on this as well. So regulators, compliance, legal, all together should agree on something. But then of course, probably country by country, they will say, no, I don't like this, or compulsory requirement, we need to include this and that. And then this is where the complexity starts. Because you need to, if you want to agree on something, and then you start putting exceptions here and there is no standard anymore.
Right. And so speaking of that, how close and how often do you talk with your legal department when it comes to trade finance?
Little.
Okay.
Little.
So you set up some templates and then it's done. Or
You receive a client template, you check, you know your policies, what is a go and what is a no-go.
okay.
And then you have to, with some expertise, you can make your own decisions.
Interesting.
And then you say, okay, this is a warning or this is a no-go. Then you need to come back and say, no, this is impossible. Or if you say, okay, this is a risk that I can bear, then you go ahead, but you need to assess this with the business unit saying, we are going to accept this, but bear in mind that there is an underlying risk in this part. And we have to be careful. And but it goes smoothly because otherwise it's going to take longer. Legal is busy. Legal is a busy area. They have a lot to do all the time. So it's you send a request today, maybe it's going to take days until they come back to you.
Might delay a bit the process.
Yeah.
Those ESG aspects bring an additional difficulty to this whole energy sector when it comes to trade finance, because like the energy sector in particular is evolving a lot because of all the ESG aspect, which is becoming more and more pivotal, critical and important for the company. So how does that impact trade finance activities, if any?
I think it's going to depend on how your company is positioned. No? Now we have this ESG agency ratings, no?
Right.
Sustainalytics. There are Morgan Stanley Corporate International, for instance, this carbon disclosure project as well. So those are agency ratings for ESG specifically. If you are with them, working with them and assessed by them, I think you have better cards to overcome the challenges from the banks, right? So you say, I have green infrastructures, I have green products, I am very green, and then probably it goes faster. And then if you are in a risky business, then maybe everything gets a little bit locked sometimes.
Mm-hmm.
It depends, I think. It depends on in which business you are.
Mm.
Does the energy prices affect anything? Like, do you get, if the overall energy sector is heading towards, like for today, like cost of barrel of petrol is quite high, energy prices are going up globally, do banks then look at you as an energy provider and go, hey, look, I'm not sure if there's going to be a demand for, well, there's always a demand for energy, I guess, so that doesn't go away. Does that affect at all your relationship with the banks and how you get treated?
Yeah, there is a huge demand of energy at the moment, right? So basically, it's going to be harder and harder to achieve in terms of lines, for instance, with a huge demand, considering that, let's put it like if you have a 100 billion backlog and 10% you need to cover, it's a lot of lines that you need to. So you either talk to more banks, or you go to local banks, or you try to use some other types of instruments. So it's going to depend on what is going to be your strategy to cover this demand. Or maybe you say, okay, let's reduce the offers on warranties, for example. So it's like you don't offer warranties just because of the fun of it. Or maybe you say, I don't need the advance payments, and then I will skip the advance payment warranty, because at the end is to cash in first. But if you don't have liquidity issues, you pay me on time, I don't give you any warranty for this, and then I can focus on performance, on bid bonds, something that is more relevant for the project itself, rather than covering a payment or covering an advance payment. So you have to pick up your battles. You have to pick your battles. What makes sense in to achieve your goals, no, in your portfolio. But this is something that is coming, definitely.
Super cool. And what's Siemens' role in that overall? So Siemens as a company, or Siemens Energy as a company, sorry. How is Siemens energy positioning itself in the global energy division and economy overall?
We are supplying like 16% of the global energy worldwide, so it's huge, and we have presence in more than 90 countries. So it's 92,000.
Which types of energy? Which industries?
It's we have the gas service, which is the gas service is focused on the large turbines and the steam turbines. Okay. Then we have the grid technologies, which is focused on the storage and transportation of energy. And then we have also the wind power, of course, and the grid technologies as well. So there are 4 main areas, but everything is focused on sustainability, affordability, and to have reliable energy. So basically, it's reduction of emissions. It's to provide to reduce the greenhouse gases, no? And also reduce the energy consumption. So basically, the more efficient you are, the less consumption you will have in your products. So this is the key focus. And of course, you need to invest in innovation, keep investing in innovation, but we are there. We have the means, and now it's up to also the policymakers to say, okay, let's go to the next step, to the next level. And the challenge is also that not every country is at the same level. No? So maybe Sweden, Norway, they say, well, we are very green, but in other markets, they are not that developed. So the demand of your products is less or different. So you need to adapt according to the development of the country. What the country is requesting now. It's solution A or solution B, or is the advance of A or B. This is the biggest challenge, I guess, because we are a global company, so you have customers at different levels according to the countries.
And so among the different challenges that you mentioned in trade finance, but also in the energy sector overall, how does the Siemens Energy Treasury team navigate those? I'm thinking, for instance, about the fact that you said each country has its own regulations, expectations when it comes to trade and trade finance. How do you navigate all this? Wrapped into how do you navigate such a hectic and quite some topical industry that is the energy one?
Yeah, I think in our company, what we try to do is to have the proper expertise in every country where we have a presence. So we have teams that are dedicated to specific markets and specific countries. So like this, you have enough knowledge to solve your problems, but also it's important to build good relationships with your banks, with your partners, in which you know exactly how the game works. Mm-hmm. You need to play a good game, and you need to have key persons on the banks that will solve your problems. You will have your key customers as well, and all the key players in the equation need to talk to each other. But also, it's important to have policies inside your company. So like this, you know exactly what you're allowed to do, what you should not be doing to mitigate the risk. And if you don't have this, it could be tricky to make good decisions, right? So if you have internal rules, you say, okay, I know until how far I can go. And you have the expertise, you have your banks, you have your clients, everybody talking to each other and running as smoothly as possible, but it's never that smooth, but never. It's but it depends on the market as well.
Yeah. How do you develop, nurture, and maintain that expertise? Is it bringing in-house very trade finance experts? Is it growing them in-house because of the very specific challenges Siemens Energy has? Is it drawing and tapping into the expertise of banks, because obviously they see and have lots of trade finance, right? So how do you make sure that you always stay up to date with all this and always have the best expertise to tackle the challenges each country and project comes with?
Yeah, one is exactly to keep close contact with the banks, because they know the regulators, they know what is going on in the market.
Have to.
So it's important that they give you feedback all the time, and you ask for this feedback as well. So keep close to the banks because they know a lot. Use them, use their knowledge. Also, of course, you need to have a set of professionals, trade finance professionals, but not only, because trade finance is also very well connected to cash management. In this sense, you can have a treasurer covering not only trade finance aspect, but also as well the cash management component. You know, as in the example that I explained, there was a combination between trade finance and cash management.
Right.
It could be even an FX component, because if you are having a warranty request in a foreign currency, if you are the FX manager, you can also raise your hand and say, okay, I have a FX topic here as well in this future project. So all these three pillars work closely. So of course, it depends on the companies. You can have a competence for trade finance and FX and cash management, but at local level or at regional level, it could also make sense to have experts that cover all these three products, and it's going to be even more attractive.
Yeah. And so linking expertise with technology, how has the technology in trade finance evolved? And do you see any trends or any latest innovations in trade finance that's particularly useful for our industry, if there are specific tools for the energy sector, or like in trade finance in general? How do you navigate this, and which tools do you choose to work with when it comes to trade finance?
Yeah, and when you achieve a certain size of the company, then it always makes sense to try to find an internal solution, because this is the way how you cover ground. So if I go in a service provider that is going to cover one part of the region or one region, is probably not going to be sufficient. And this is when the big companies say, I'm going to build something that will solve all my problems internally, and then I will probably look a service provider to, for example, to connect me with the banks. And but like this, you can have a better internal transparency, internal control. You can have workflows in terms of approvals, who does what, who is responsible for what, audit track, and then you can, what we see, we see a lot of now tools that connect with different banks, but then again, it's challenging to find out if this service provider is covering all my banks, because if you want to buy a product and they say like, yeah, I cover 30% of your market, then I will need 3-4 partners for the same, and I don't know if it's efficient to be connected in 3-4 different platforms. Then the banks will have another platform offering the same. But if I have my own thing, my own database connected, I think it's the dream. You keep the knowledge, you keep the track on the things, the workflows, and you are connected to the banks. This is probably the future.
Interesting. But so I suspect if it was a contract with Siemens Energy, a third-party provider would say, okay, right now we're connected with only 30% of the banks that you're talking about, but we can make an effort to connect with those other banks as fast as possible. Or would it be too much of an effort on the system vendor side as well to say, okay, look, we cannot cover that scope?
It is a big effort. And also because even for simple stuff, banks might not have the infrastructure.
Okay.
Small banks will say, I don't have the capacity to implement what you are asking.
And so then focusing on your solution, because I think that will interest lots of treasurers. How do you unlock the resources to build an in-house solution, especially when it comes to trade finance? Because, I mean, we know it. And one of the main feedback we get is that the treasury function is not always super well funded, because it's still a support function. And even though it gets more and more strategic, it's like hiring talent is sometimes difficult, but like let alone unlocking budgets to implement third-party systems. Like when it comes to developing your own solution in-house, how do you come around with that? Because that's quite a significant effort as well on the corporate side.
Yeah, it takes years, honestly. So you start with something and then you develop. Little by little, you start developing according to your needs, no? Because you will discover by the years that you need this, you need that, and the trends also, the technological trends will navigate you to different solutions. And but the thing is, if you have experts, you have two ways. You outsource your IT part, in which you say, okay, my treasury IT is going to be outsourced to the general IT department, or I keep it in-house in treasury. So you have the treasury IT department. For me, either way could work, but it's having a treasury IT could be probably more attractive for people, in the way that I have been doing treasury for 10 years. I need to see something else. Okay, so do you like technology? Do you like treasury operations? Why don't you go into this department? And
Super cool.
And you will have better insights than a normal IT guy, right? So you could add value.
That's an amazing career advice here.
Yeah.
Like, definitely. And developing new skills, having the company help you developing those skills, and then bringing tremendous amount of value to a treasury department.
In different projects, this would make the difference, because if you don't know what you are building, it's going to be very difficult for the end user. The end user will come back and say, this is missing, this is not working. And then you try to connect the dots. But if you never did it, the end-to-end process, and you don't know why this end user is requesting this, it's going to be harder. Right?
Typical. That's good career advice overall.
Sense.
Danilo, thank you so much for coming on the show. Is there anything that we haven't covered about trade finance that you'd like people to know about?
For me, trade finance it's a really important area of treasury, because it helps the liquidity on the companies, and at the end, treasury is the guardian of the balance sheet, so it's very important, and it's better that we as treasurers try to find solutions rather than service providers finding the solution for us. We have to be proactive in this regard, I guess.
Super cool. Thank you so much.
Thanks a lot, Danilo.
Thank you very much.